This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And we're seeing that risk-off trade sweep into the grain sector again despite a softening U.S. dollar. And when we start looking at this corn contract, May is going to be the month of interest for us. We really failed just near technical resistance, 387.5 to 390 yesterday. That represents a 50 and 100-day moving average as well as a key Fibonacci retracement. This is going to be a big barrier going forward. And honestly, I'm not so sure that the bulls are going to have enough mustard to get out above here. We do have a USDA report right around the corner, so potentially that could spark something. If we do get out above there, that could trigger additional short covering. But from the fundamental standpoint and the technical standpoint, there's really not a whole lot to get excited about just yet. If we were to retreat towards 375, which is kind of where we broke out earlier this week, I think that would offer a little bit better value here in the very near term. If we're not able to defend 375, that does open the door for potential retest of contract lows, 365 and 3/4. So a couple different price points to keep on your eye on there as we head towards the last trading day of the week. Moving over to soybeans, we're about as neutral as you could get here. Right at $9, I don't think there's a whole lot of value to the upside or the sell side. 910 was the February highs. We poked our head out above there yesterday, but really weren't able to get any follow-through momentum, which has us retreating back towards $9. If we break and close below $9, I think that opens the door for potential retest of the low end of the range, 880. At that point, I think you can make the case for looking at being a potential buyer down there, so long as we can kind of see that 880 level hold on a closing basis. Now, wrapping things up with the wheat market, that Kansas City-Chicago wheat spread has been all over the board here recently. We continue to have a bearish bias on wheat in general, but more so on that Chicago contract. 528 to 530 represents a 200-day moving average and 50% retracement. Ideally, this would be a good spot to sell against. We've obviously come off of that this week, so we're now testing first support, 510 to 512. Recent lows as well as the Fibonacci retracement. If that gives way, I think that opens the door for a potential whoosh lower towards that psychologically significant $5 handle and potentially below there. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.